please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's this afternoon, Mayuresh Joshi and Prakash Gaba with us to answer the queries that are coming in. And also, it's Friday, so that means it's ladies special. So the two gentlemen will be answering all the queries that our women viewers are sending us. So first up...
Samara, before we get to that,
Sure.
I think something very, very ugly has taken place in the last few minutes. Just get back to the markets. Pull up the Nifty. Pull up the intraday chart, actually, of the Nifty. Let's just get that up for you on the screen. We are holding with the cutoff from 30-40 points. Now we're down close to around 85-90 points as we speak. The mid-cap index is down 2.5%. So clearly, there's a lot of selling that's come in there. And the Nifty Bank as well was doing a mild outperformance. Take a look at what's happened in the last few minutes. Now, that's moved into the red as well. The real pain, though, is in the broader markets. Pull up the intraday charts of these stocks. Infibeam was already under some pressure. Reliance Communications has sold off. You have Bank of Baroda that's now down close to around 4% approximately. And the breadth of the market will tell you the picture. We have only 280 stocks that are advancing. You have close to around 1,850 stocks that are declining, and those crisscross lines should come up for you. We're down 90 points. You'll say that's not so bad, but what's happened in the last 10-15 minutes, that's a bit scary. Big selling pressure is what we're seeing. It's Friday, remember, it's the end of the week. Some of those traders will have to wind up their positions as well before the end of the week, and that explains why now the index is down close to around 95 points. Anuj as well is with us in the studio. Anuj, all of a sudden, big selling, end of the week. Someone's really offloading and selling on the screen.
I think at 1:30 the indications came, Nigel, because it was clear that there was a pullback which was being attempted, but the broader market, the way it was selling off, it looked a matter of time before the indices would sell off. And once 10,950 was given up and the morning low was given up, I think you saw that move play out. And I think what's really interesting is, and sometimes on days like this, your heart goes out to the mid-cap investors. The mid-cap index is down 500 points. The fresh 52-week low, I think, over there. Small cap had already done that. And the way stocks are falling, till yesterday, you could have blamed it on expiry. You could have said, okay, it's expiry pressure. Today's the first day of new series. What can you blame it on? I think it's complete panic. Some of this perhaps is now unwarranted, especially in the broader market. But just like we saw on the way up, things did get overshooted. So right now that's happening. I mean, Yes Bank is down 17%. That's the index stock that we're talking about. JSPL used to be an index stock, of course, at one point. That's down 15%. So right now it's a complete panic situation which is taking place. And so, I think it's only the HDFC twins which are sort of trying to bat for the bulls. If you see the charts of HDFC and HDFC Bank, in fact, that's quite interesting because those are the two areas where you haven't seen any selling. And that begs asking one more question. Again, today, has there actually been some kind of buying by FIs, in some of the good stocks, and the selling is mostly domestic, mostly panic driven? We are perhaps in the last phase of panic where you see stocks falling 40-50%, and the excesses are flushed out straight at one go. That's what's happening, I think, in the broader market for sure.
Okay, all right. And the point that Anuj made about the HDFC twins, if they weren't there, we would be down easily another 30 to around 35 points as the director had pulled up the contribution chart. But I think Ashwani is back with us. Ashwani, sharp downtick is what we are seeing. We were hoping at some point of time we'll see a short covering bounce. Now, looks like the bulls are throwing in the towel.
See, that is the worrying message for me. That, after big decline, you can't have a 100-150 point pullback on the Nifty, and people are ready to sell the moment they see green. That's trouble. And mid-cap investors are in a big problem because mid-cap index did not recover even for a single day. So basically, rate sensitives, interest rates going down, that got a lot of money into all kinds of financials, microfinance, private bank, this bank, that bank. PNB is at 58. So my sense is something is happening on these PSU banks now. Everything is down 3.5-5%, but the way the market is acting, there seems to be more downside. Now, whether that happens today or it takes some time, that only time will tell. But bad macros, market overloaded with financials, that's proving to be a heady cocktail. My sense is that don't bank on 10,900. Chances are that will get given up, and given up fairly strongly. This shows the strength of the trend. And now you don't have even IT to bank on. So my sense is this phase of decline will be even stronger than the previous phase, because people are looking for, value hunting, this, that. I don't think below 10,900 the value hunters will be very active, because as we can see, the value keeps getting better in Yes Bank. So that way people need to be positioned for more downside.
All right. The Bank Nifty 4 now back in the green, but just barely so, and once again looks to be slipping. The Nifty for now is holding 10,900, but Ashwani says don't bank on that, and it's the mid-cap end of trade where the real trouble lies. Prakash, what's your sense on how the the last few 1.5 hours could shape up, and what lies for next week?
What we saw in upmove was purely turned out to be more of a reactive up when it came down. The moment it broke around 10,960, 65 zones, I think is coming down. Now the crucial level to watch would perhaps be the low of a couple of days earlier. If that happens, I think we could be going for a toss out here. Perhaps this could happen on Wednesday and Monday and Wednesday. I have a feeling that this could happen there.
All right, Anuj, what's your sense? Do you think, in fact, the last time around we bounced from around 10,866, I think, if I got that number right. That was last Friday itself. Now, what's your sense on the Nifty and the index?
Yeah, and Nigel, again, the issue is not even the Nifty and the Sensex. They'll be fine. It's a broader market. I believe, what we are going through perhaps is now that cleansing out process, that process where equity will become a hated word, and that sometimes is the start of the bottom formation. It's long, of course, it takes time, but the price damage, I think, in a lot of stocks is now getting to a stage where, if you're falling 40, 50, 60%. For many months now, the market was giving an indication that perhaps don't, overstay your welcome in the mid caps and small caps, stay in quality stocks. Even quality stocks have fallen, but at least they have not fallen as much as, they do. Stocks fall 60% in a single day. What are you talking about? That I think that part is telling you that poison is getting out of the system. It takes time to stabilize, though. It's not going to be a V-shaped recovery. It's perhaps going to be U-shaped. But before that, you need to stop falling. You need to reach a stage where the market just stops falling. It does not need to go up, but it needs to stop falling, and then perhaps you can talk about some kind of recovery. This is also finally a domestic story playing out. If you see this month, the MSCI Asia, Japan and MSCI emerging markets have actually moved into the green, and our market is down some 8-9%. So this is a domestic factor playing out right now. This NBFC, this money market situation, at some point it will stabilize, Nigel. And in this rubble, you will find a lot of good quality stocks which would have also corrected. Perhaps it's time to pick some of them. But we went through greed. Now we are going through complete panic, I think.
All right, so let's find out what's going on as well from the dealers' desk. Deven Choksi now joins in. Deven, good afternoon. Is there anything incremental that has happened in the last 1 hour that has led to this latest bout of selling, or do you think this is just a little bit more panic than what was there earlier?
Honestly speaking, if you ask me, I think I'm observing counters, and I'm seeing the volume taking place between cash market and derivative market counters. In respective counters where the fall is on the higher side, if you see the proportion of volume between the cash market and the derivative market, I think it has gone completely through the roof. I think normally we believe that for every 1 rupee of cash market transaction, I think 10 rupee worth of derivative market transaction takes place. In some of the counters, I think this is more than 100 times. And I think this is dangerous. I think the point which I'm trying to say is that I think investors would get nervous in some of the mid-cap stocks, more because I think the derivative market is basically operated on a cash settlement basis. And on the top of it, I think the huge amount of volume is taking place and bear hammering is taking place and all kind of things happen. Because of which I think the cascading effect happens on those counters. And that's where I think the damage is taking place in the marketplace. So I'm completely clueless as to how this kind of activity be allowed in the stock market, where on the one side cash market volume is 100 and derivative market side volume is say 1,000. How this is completely clueless.
Okay, all right. So that's a valid point you're making then, Deven. In fact, it's the first day of a new series. And in the F&O market, you already have 5.5 lakh crore that's that's already been traded. Normally it's around 2 and max around 2.5 lakh crore on the first day, but those are the volatile times that we're looking at, and some of those stocks are absolutely falling off the cliff. So there is a bit of fear, Deven, that's playing out there. But would you keep your shopping basket ready? Are there those select stocks that you were looking to buy on a dip of around 10%, 5%, 20%? Will you be looking at getting into those stocks? Some of those stocks, I mean, Kotak Mahindra Bank, for example, it's corrected a fair bit from the recent peak. That's seen a bit of a recovery in the last few minutes.
Yes, certainly. Because since we follow the fundamentals more than the market technicals, I think we definitely buy into this particular market when the market gives opportunity at lower levels, when we are convinced about the fundamentals. So I think our approach has been that where there is an exceptional fall and where the fundamental story is convincing, I think never afraid from this kind of a market. I think you keep on doing your accumulation. Any
particular sectors, Deven, that a lot of retail audience out there, they will be fretting this fall? Any particular sectors? Would you say the rupee is weak, so get into some IT, pharma, or select stocks that some of our audience can go in there and
Nigel, this is not the sector story currently.
Okay.
This is more individual stocks, I think, on which you have to keep focus on. You should ask this question that I think, is anything wrong with Yes Bank that I think the stock price is at half of what it was quoting a few days back? Or you should ask this question, similar question to some of the other good quality stocks which are fundamentally strong.
Right.
Where exactly the problem is? According to me, I think the problem is elsewhere. Market technicals are actually, I think, weak. The fundamentals are not weak at all.
Especially in the broader market. Just before we went into that break, Prakash, Deven was telling us that perhaps the problem with the market is technical and not really fundamental. Is that a view that you hold as well? And also, if 10,900 were to break, I mean, how much lower can the market go?
It can go up to 10,800 or even more lower, because what we have seen is some kind of a pattern. What we have seen is the upper regions more of some kind of a pattern which is known as a short-term head and shoulder pattern. That is a weak reversal pattern. It is purely a textbook pattern, and we feel that there is downside in the days to come. So I would say yes, there is a problem in the market, and the problem seems to be purely technical in nature. And I think maybe we could see levels closer to around, maybe around, I would say that 10,800 or maybe lower.
Okay, all right, 10,800. But the headline index, as Anuj was making that point earlier, that's not really the one that's bothering you. Now just take a look at some of these stocks in the broader markets. Gati. Pull up the intraday chart out there. In that bull run, you heard a lot of stories, investor coming in, promoters looking to sell, etc. Gati's intraday chart comes up for you. That's down 15%. Lakshmi Vilas Bank. Pull up the intraday chart out there as well. That's suddenly taken a sharp knock in the last few minutes. That's moving lower as we speak. So some of these mid-cap names, they're absolutely getting a trouncing. We're looking at the headline index and thinking, well, it's not too bad. Pull up the intraday chart actually of Jain Irrigation. Something's gone wrong there. That stock is down nearly around 10% as we speak. And the intraday chart will tell you the kind of volumes you're seeing out there as well. Century Textiles, that's another one. Mayuresh as well as with us. Mayuresh, fundamentally, Deven told us nothing's really gone wrong. Your take on the fundamentals of the market, and also anything is looking good or at some level will look good?
So Nigel, again, I think I totally concur with what Deven and Anuj were saying at this point of time. I think with all the concerns and sentiments becoming so sour, I think the natural sell-off that you're probably seeing in the markets gets accentuated. So I think the natural drift that is probably happening in terms of where people are sitting on money or where they are making profits in qualitative names, even those are probably getting sold off in this carnage, and that has nothing to do in terms of what or how the fundamentals are poised. So if one probably talks about corporate earnings, they're expected to grow at a very decent clip going forward. Yes, the other variables probably not in favor, but I think the markets are cognizant of that fact. So I would tend to agree that the excesses are probably getting flushed out. I think quality names which have corrected do give an opportunity to get invested in a staggered way. But again, I think investors should be a little bit more cautious. I think they should just ensure that the markets and the mayhem plays out over the next few days and weeks. But qualitative names in the banking space, HDFC Bank, you've got HDFC, you've got Bajaj Finance within the NBFC universe, you've got some names within the pharma space, something like an Oro Pharma, Biocon, or even within the auto universe itself. I think there might be some short-term pain. but quality and earnings will stand out over the medium to long term. So yes, I think wait for those declines, stagger your investments through over the next few weeks, and I'm pretty sure if you have the patience and you're willing to hold on, you'll make reasonable money over the medium term.
You're talking about earnings recovering. The Nifty EPS hasn't grown much in the last 4 years approximately. This was supposed to be the big year in terms of earnings growth. And when we're likely to see that, suddenly the market's going to a bit of a tizzy. And the fear is that the financial space, that could be under some pressure, which will pull down the Nifty EPS growth. What kind of a number are you factoring in terms of a Nifty EPS? We're looking at 20-25% is what most of the street are expecting. You think that's doable still, or do you think, as we've seen in the last so many years, we're factoring in 10-12% at the start of the year, at the end of the year, you're moving with around 2%. Your take on that?
No, obviously, Nigel, I think over the last 3 years, 3.5 years, everybody was expecting the recovery probably to come out in the second half, and it's obviously disappointed. A large element in terms of even the private capex lagging out, I think has been one of the core contributors, because the government capex has always been front-ended, and you've also seen in this fiscal a similar pattern probably coming out. Yes, you're absolutely right. I think in terms of what you're probably seeing at this point of time, in terms of the squeeze of liquidity that the markets are witnessing, and the entire mayhem in terms of the growth prospects that NBFC strokes financials might not be able to deliver as per the market expectations. My own sense is that the gradual earnings recovery will still play out. So I think the second half, where the normal estimates, and you're right, I think is a little bit on the higher side. Even if one moderates that to a 10-12% earnings growth, and that earnings compounding over the next fiscal year because of private capex coming through, utilization levels going up, and the general confidence coming back with credit growth improving, should have a say. So I think earnings should grow at a very decent clip of 10 to 12%.